Welcome back to Instables, everyone. So going over my daily plan on exactly how I plan on playing into the SPY. As you guys can see, we do sit on a pullback after non-farm payrolls coming out higher than expected. Again, we wanted a lower than expected non-farm payrolls coming out. That way we got a reaction to bad jobs data, as again, Jerome Powell, the last few meetings, has been mentioning that he wants an increase in unemployment and he wants a decrease in inflation. Again, we have our CPI inflation report coming in this Thursday. We do sit on a pullback after non-farm payrolls. We did have our false break at our previous CPI that we had. Again, we had anticipation on that major decrease in CPI. We did get a decrease, however, higher than expected. We did get a pullback, a correction from that anticipation. Now our question is, are we going to get a bounce leading into CPI on possible anticipation, or are we going to get a continuation on lower, which would be our wave 5 on our Elliott wave, which I'm going to go over with you guys as well. Now, before I jump into this, if you guys can do me a huge favor, smash that like button if you find this video useful at all. Hit subscribe if you want to see my daily plan on exactly how I plan on playing into the market every single day. We go over candle structure, overall strength levels, and any key indicators that we need to be focused on. And again, if you are a day trader or you are looking for very volatile breakouts that we mention every single day in the Instables, and again, we mention any breakout that is worth looking at throughout the day, go to instables.com in the description below, and you will never miss a breakout alert today again. So jumping into the daily chart with you guys here on the SPY, as you guys can see, we do have what would be called a fifth Elliott wave count that could be coming in. As you guys can see, again, we do have our first wave, our second wave. I haven't been going over this very much because we just got confirmed on our fourth wave on Friday. Again, with that non-farm payroll coming out, we did get an overreaction, a correctionary stage here on our Elliott wave counts, which could be our fifth Elliott wave coming in, and that could be our test on our 340 level here if we do continue on lower. And in my opinion, we would be looking for a bullish setup. Again, our 340 level is very key. As you guys can see, backing all the way up here to our 340 level. Again, this is the point in which we did break out of our pre-pandemic levels. We have been talking about this point. Again, confirming and breaking above here as we did have confirmation, breaking out of our pandemic momentum and confirming higher at that point. So again, 340 is very key. As you guys can see on our VPVR, also showing us that this is a very key point. As you guys can see on our VPVR, on our overall momentum here, again, we have a very strong point here coming up at 340. As you guys can see, again, the strongest point that we have coming up on our VPVR at 340. So we have two reasons to think that we could bounce at 340. And again, from 340, I would be looking to see if we either do bounce, continue on higher, or we do get a possible rejection, come down to our strongest point on our VPVR, which is again our pre-pandemic levels at 324, and then possibly look for a bounce from there, a possible continuation on higher, maybe even a possible inverted head and shoulder from here and a possible reversal. That's what we'd be looking for. Again, guys, this is very key. This is exactly what we would be looking for if we do continue on lower. Now, looking intraday, again, we are leading into CPI this Thursday. There is a very good possibility that we do get possible anticipation on the Fed's pivoting again, just like we did prior. We had that happen here with our CPI. We got that false breakout. As you guys can see, getting that false breakout again with non-farm payrolls, not exactly what we were looking for on data for that, again, only possible Fed pivot that the Fed still do have to listen to. So again, we will be careful with our possible fifth Elliott wave coming in. And again, with CPI coming in, very much going to be looking for the Feds to listen to this CPI. If we do get a major decrease in CPI, if we do not get a major decrease in CPI, we saw what happened last time, again, getting that correction after that anticipation. So again, making sure we are careful. Now looking at our overall strength, again, this is our MACD. Again, we do have a white shaded line. This is a decrease in buy pressure after getting two increases in buy pressure. So we are going to be careful. We could get a possible continuation on that pullback. Again, leading into CPI, we could anticipate a possible decrease in CPI and also a possible Fed pivot, just like we did last week, leading into non-farm payrolls on Friday. However, we could also continue on lower here as our EMA lines are curling down at this point. We do want to make sure we are getting more confirmation on bullish momentum intraday. If we are playing that anticipation leading into CPI, we are pointing down at this point. So again, I would just be careful leading to CPI, looking for confirmation either to continue on lower to that fifth Elliott wave count. For that major move, in my opinion, would be better than looking for a possible major move at this point to the upside, because we do have resistance coming in and we're not exactly sure what CPI can come out as. Now, our bullish scenario here is that we do get our EMA lines to start to curl up and getting a lower than expected CPI with that anticipation on the Fed's pivoting. And if they do not listen, then we could possibly curl back down and possibly look for that momentum once again with our 12 crossing back over our 26. And then when we do get that confirmation on that continuation, making sure we break above the median of our MACD is extremely key. Very underrated indicator that a lot of people, I really feel like, don't look at. We need our EMA lines to cross above the median of our MACD. Very key Now looking at if we have room to run to the downside, as you guys can see, we did complete our divergence here. We still could continue with these divergence if CPI comes out lower than expected and the Fed start to listen, then we can have that continuation on that momentum that we would be looking for to break above the median of our RSI and then possibly continue on higher from there from these divergence. However, again, very much predicated on what exactly CPI comes out as. Now looking at the VIX representing volatility, as you guys can see, we are respecting our 20-day moving average after getting an engulfing candle to the upside, clearly respecting our 20. As you guys can see, our 20 crossing over our 50, showing us a lot of bullish momentum. We need to make sure we are careful playing to the upside. If we do continue on with this momentum on our VIX, then we can continue on higher. However, if we do get a slight pullback, a possible retest on our 20 to possibly continue on higher from there, then that could be, again, that slight bounce with CPI to continue on lower. Again, that would be what we'd be looking for if we did get that momentum to the upside, is to see if we do get a possible pullback for that continuation on higher here on the VIX. Again, until we do drop down below our 20 on the VIX, then we are not safe on the S&P 500 to play it to the upside, in my opinion. Making sure we are watching the VIX, extremely key. And lastly, looking at the dollar, as you guys can see, also getting an engulfing candle, respecting our 50-day moving average, showing us a lot of strength. And we are wondering if we will continue on higher into newer highs. If the dollar does continue on into newer highs, we need to make sure we are careful on the S&P. And again, looking for a bearish setup on the dollar or the VIX, very much going to be looking for those possible bearish setups to look for more strength in the S&P to the upside. But again, at this point on the SPY, making sure we are careful playing to the upside, looking for that possible bearish setup if we do have a bounce, or in my opinion, if we do continue on lower on this fifth Elliott wave, then in my opinion, we could be testing our fifth Elliott wave count that could come out here at 340. So again, just looking to see if we do get that bounce from 340, if we do continue on lower on a fifth Elliott wave count, or if we do continue on higher on a possible major decrease in CPI and the Fed start to listen. Looking for that retest and confirmation, in my opinion, would be very key if we are going to try to continue on higher and look for that possible reversal. So again, just making sure we are staying focused on candle structure here, making sure we are focused on momentum, and I will continue to go over exactly how I plan on playing to the SPY every single day, guys. I appreciate you guys for coming over and supporting the channel. And again, if you guys are day traders or you are looking for very volatile breakouts, we mentioned every single breakout that is worth looking at throughout the day. I know the market can be very choppy, maybe pretty discouraging, but when you're in the Instables room, in my opinion, it's just a little less discouraging than it could be without. So again, it's better to have it than need it and not have it. So again, go to instables.com in the description below, and only for $15 a month, you guys will see all my breakout alerts that I mention every single day throughout the week. And again, all of you Instables that come over every single day and support the channel, again, just staying patient, letting the plays come to us. Again, if we do continue on lower here, just looking for our fifth Elliott wave count to come in for that possible reversal or possible bounce back. We will be looking for confirmation from there, but again, just letting the momentum come to us. If we do get a possible bounce back with CPI, then we will be looking for that confirmation. If we do get that pullback and continuation on lower, then we will be looking for that confirmation. So again, just letting the play come to us, staying focused on momentum. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.